Good day, ladies and gentlemen. It's Eric Coffin. I'm here on June 19th, 2020, the day after our most recent virtual metal investor forum. And I'm here with Spencer Cole of Vox Royalty. Vox was one of the presenters yesterday. It was Kyle Floyd who did the presentation. Spencer's another one of the key guys, and he's going to be answering some questions based on some of the feedback I got yesterday, and also just some more general questions. Welcome to the welcome to your office or your living room, Spencer. But
Thanks, Eric.
I just just to give people a little bit of background, Vox is really my first foray into the royalty space in terms of the newsletter, and the reason why I started with Vox was I like the fact that it was a group of young, pretty aggressive guys. They've been growing their royalty portfolio quite quickly over the last couple of years, but they actually started putting all this together 4 or 5 years ago. They appear to have a very good pipeline. They've already closed 2 or 3 deals, and they've only been public for less than a month, I think. And but I did get a couple of questions that kept coming up on the feedback stuff from yesterday, and I know you haven't brought your first quarterly out yet, and I know there's issues in terms of what you can and can't say in terms of forward guidance. So I'm not going to ask you to quote a number, but because you've got a large number of royalties already, maybe you could walk us through the ones that are either producing or going to be producing in the next 2 or 3 quarters. People can get a sense of what should happen to revenue, assuming everything goes according to plan at these different operations.
Sure. That sounds good, Eric. And I guess firstly, thanks again for having us on the on the forum. We're really appreciative of it. So we're getting this question quite a bit, obviously, about what our revenue forecasts are going to be, and so it's no big surprise there. I think as you touched on in our first quarterly, in the June quarterly, we expect to give a bit more guidance to the market about more specifically what that looks like. What I can say today, I guess, is firstly, our G&A, despite having six investment professionals and a frontline business development team of 4 of us, our G&A is something that we focus on very acutely, and so our G&A runs sort of sub $2 million per annum, and so with our current revenue that we're generating, we're easily covering that G&A. And then I guess more on a forward-looking basis, we've currently got two producing royalties, the Coolionobbing iron ore royalty and the Grafmata graphite royalty. We've also got a third royalty, the Torrecias gold mine in Peru, which we're receiving advance royalty payments on that asset as well. But I guess as we look ahead towards 2021, we've got another 3 gold assets that we believe as management have reasonably high potential of coming into production in 2021. And those 3 assets are the Dry Creek gold royalty, which covers part of RNC Minerals' Higginsville operations, the Mount Ida royalty, which funnily enough we acquired from a hearing aid company. So that's a gold royalty that the operator's guiding the street towards the fact that that's going to be coming into production in the next 6 months. And the British King gold royalty, which is another West Australian gold royalty. I think the important thing to note out of these 3 gold royalties is all 3 of them don't require any additional capex to build. They're all gold royalties where they've got adjacent processing plants or mills, that they're basically feeding. So it's just a case of those pits being, mining commencing on those pits. So I guess that gives us confidence that, management guidance around those 3 royalties, has fairly low execution risk.
Mm-hmm.
And so in terms of what the revenue those could bring, I think, as I said, we're easily covering G&A at this point. And, so we would expect, our revenue growth over the next 12 to certainly 18 months to be exponential.
Mm-hmm.
But more specifically than that, unfortunately, I have to wait to the first quarterly.
Now, obviously, a big part of the reason why you went public was obviously you did a raise, you did an IPO. I bought some of it, and but as importantly, maybe more importantly, you tell me based on negotiations, you now have a currency. Essentially, you've got a publicly traded stock that's valued by the market by essentially a third party as a currency. And having that in hand now, does that mean you guys are maybe going to go up the food chain a little bit and look at bigger things, or are you still going to keep to this same this kind of? I know you've got this competitive advantage in being able to go to property vendors and people that people where the street doesn't necessarily even realize they own a royalty, but there's also sort of bigger fish out there. Are you kind of going after some of those now too that you're maybe in more of a position to?
Yeah, no, it's a good question, Eric. Absolutely. So I think as we guided the market towards like historically our average ticket size per royalty was about $500,000. In terms of dollars paid per royalty. We certainly expect that average deal size to increase materially now that we're listed. Um, so I think in terms of the near term opportunities we've got in the pipeline, there's a number of royalties in the sort of $1 to $5 million sort of bite-sized range that we've got either term sheets out there in the market or some of which that are likely to come under a binding letter of intent within the coming weeks. So I would expect that we'll probably in the coming months we'll be closing a few of those deals in that sort of ticket size. And then I think as we look ahead towards the remainder of 2020, I would expect that there's a number of really attractive portfolios and sort of larger value producing individual royalties that we're chasing pretty hard, importantly on a bilateral negotiation basis. So, I would expect that our average deal size will probably, at least triple, if not quadruple, over the coming months. But to your point around, I guess, the ability to use, our stock as listed currency, we're being as disciplined as we were as a private company. We're certainly not, relaxing our internal sort of investment thresholds now that we're a listed company. So, frankly, we've been saying no to a lot of deals, and even where we've got those deals on a one-on-one bilateral negotiation basis. So we'll continue to walk away from deals when the pricing gets too rich for us. But absolutely, the ticket size will increase on future deals.
Okay, and when we spoke just before you listed, it sounded like there were a lot of things that you were close on, and of course, two or three of those have come to fruition in the last month. Is there other things sort of on the near term horizon that you think will get closed here?
No, absolutely, Eric. So we've got we guided the market towards the fact that we had 4 deals under binding letter of intent on day one when we listed.
Hmm.
And so since then we've added to that tally of letters of intent on so binding sort of options, if you will, over royalties. But I think going forward we probably won't be disclosing with the number of sort of
Yeah.
binding options we've got over royalties. We'll typically wait until we've got binding purchase agreements executed. But I guess our internal management target is that we challenge ourselves to be able to I guess do 1 deal a month.
Right.
And frankly, that's sort of unprecedented transactional volumes for the industry. But I guess that's an internal hurdle that we set for ourselves. And based on what we've got in the pipeline, I think that's very achievable.
And one thing too is, and obviously I'm not expecting a direct answer to this question. I would expect you to step around it a little bit if the answer is yes. But one of the things I
Don't
viewed
worry.
as an advantage was the deal that you did, of course, with the organization that you, in fact, came out of, were one of the founders of, that generated this mining royalties online that gave you this big database, not just of mining companies, but of third-party vendors that who had sold projects and the option was fully realized, and so people had kind of stopped thinking about the vendor, but they still had a royalty in their hands. Um, and now that was mainly in Australia. I think that's where your focus was with mining royalties online. Do you know of anybody else, or is there anybody else you're talking to? And I'm asking this as a generic question. I don't expect a specific answer. Has anybody been doing that anywhere else in the world where you think you can get your hands on a database like that? I mean, do they exist, or are you thinking about trying to generate one?
Well, I mean, so one minor point, I guess to clarify, like our global royalty database, which is over 7,000 proprietary royalties, only about 20% of that are Australian royalties. So the remainder are, are royalties in other countries and jurisdictions. So, it's far from just an Australian royalty database. I think, we've just had a really good first mover advantage in Australia, given some of our management team are Australians, and, our networks in Australia mean that we've got somewhat of a first mover advantage there.
Right.
But so I think in terms of the deals we're going to be printing going forward, we'll probably continue to have a number of Australian deals, but I think there's a number of really attractive royalties we're looking at in Africa at the moment as well. So
Okay.
I'd be very surprised if we didn't print a few African royalty deals over the coming months as well. Um, on your point around, are there any other third-party royalty databases? Look, it would be naive and misleading to say that none of our competitors have built their own databases. But what I am very confident about is that our database, in terms of the scale and quality of it, you know, far surpasses all of our competitors. It could be conceivable that Franco-Nevada, as being the creator of this industry, might also have their own proprietary database. But I guess one thing that where the proof is in the proverbial pudding is when we continuously find ourselves as the only royalty buyer at the negotiation table with different royalty owners.
Right.
I mean, that's really the proof to us. Out of our last 14 deals, 13 of them, we've been the only royalty buyer at the table. So yes, there probably are a few other smaller royalty databases that some of our competitors are using, but until the day that we stop, finding ourselves as the only buyer at the table, I think we're quite confident that the IP that we've got will give us, a competitive advantage for some time.
Okay. Yeah, it's actually that's a good and uh, a pleasant surprise. Actually, I was always sort of under the impression, mistaken, obviously, that mining royalties online was largely an Australian database. It's quite interesting to find out, and I think it'll be enlightening for people to realize only 20% of that database is Australia. You're actually on the hunt all over the place with, and I know you've got people on your team, and you're in Toronto. A couple of guys are in Australia. I think you probably get guys floating around in other places that where you're actually building network all over the place to sort of help the pipeline keep going. I think that's a great introduction. I mean, Kyle did a great job yesterday on the presentation. If you're not familiar with the royalty model and you're looking at royalty deals, Vox is a very new one, very tight structure, very aggressive management team. I think this is a deal that's going to do very well over the next few months. And I'm glad you stopped by to talk to us, Spencer.
No, thanks so much for your time, Eric. And yeah, we really appreciate being included in the forum. So yeah, thanks again.
Okay, that's it for today, ladies and gents. Thanks for stopping by. I'm sure you'll be hearing from us again soon.